Welcome to SIRA MCQ YouTube channel. Today we discuss advanced level A-level accounting paper 2023 question number 8. This is related to sole proprietorship question. Look here, what is the requirement? What are the correct gross profit and net profit? You can imagine that they already calculated gross profit and net profit. We must identify the correct one. They already calculated wrong gross profit and net profit. We must be identify the correct one. If the loss of inventory, there is a loss is there in the description. Loss of inventory and insurance claim had been properly adjusted in the books of account. We must identify the correct net profit and gross profit if the loss of inventory and insurance claim had been properly adjusted in the books of account. After the adjusting of loss of inventory and insurance claim, we must identify the correct gross profit and net profit. Look here. Question. Aruni Traders is a sole proprietorship during the year ending 31st March 2023, and inventory costing 20,000 was fully destroyed, damage, okay, and 80% of this loss, there is a 20,000 stocks are fully destroyed, and 80% of this loss was reimbursed. Reimbursed means we can receive cash by the insurance company. The 20,000 totally stocks are fully destroyed, but 80% of this loss, the 20,000 is a loss, no, 80% of this loss was reimbursed, means we can claim, we can get cash from by the insurance company. Okay, next one. No adjustment had been made in the books of account for the loss of inventory and the insurance claim. There is no double entries. Okay, we must adjust this error. Okay, however, the closing inventory had been ascertained, identified based on the physical stock available as at 31st March 2023. I explained that the gross profit and net profit for the year ending 31st March 2023 were 150,000 and 80,000 respectively. Before the adjusting of this destroyed stock, they already calculated gross profit and net profit. Gross profit is 150, net profit is 80. I identify this one. They already calculated. There is an income statement. No, income statement. What is the structure of income statement in sole business? Okay, income statement. There is a sales. No, there is a sales minus cost of sales. Cost of sales. After that, we can calculate gross profit. Gross profit. After that, we add other income. After that, we can minus expenses. After that, we can calculate net profit. They already calculated. Okay, let's see the question. Okay, they already calculated net profit and gross profit. Look here, what are the net profit and gross profit? The gross profit and net profit for the year ending 31st March 2023 was 150 and 80. 150 is a gross profit. Gross profit was already calculated, and 80 net profit was already calculated. Okay, we must adjust these inventory destroyed. At that time, they said that this is a closing inventory. No, closing inventory. We firstly identify the entries to destroyed stocks. What is that? 20,000 cost of inventory was fully destroyed. Okay, I write it. 20,000 means 20 now. 20,000 total stocks fully destroyed, fully destroyed. Okay, out of this 20, 80% can be reimbursed, 80% can be collect from the insurance company. 80% means 20 to 80%. 20 to 80% was 16 can be collected, and the remaining is 20 is 20 minus 16 now, 4 is total net loss of stock damage. Okay, this is the summary of the fully destroyed stock. By total 20,000 cost of stocks are fully destroyed and 80% was reimbursed from the insurance company, we can collect it, and the remaining was cannot collect the insurance company, 4 is loss. What is the double entry? This 16 already collected or not collected? Okay, look here, 80% of this loss was reimbursed by the insurance company. Already reimbursed means we already collected in cash. Okay, let's see the double entries. Firstly, 20,000 inventory fully destroyed. Therefore, the stocks are, what is the location of stocks? The location is purchasing. Therefore, purchasing is related to trade account. Firstly, we credit to trade account. Trade account means purchasing account. Okay, purchase account credit, total one. Purchase means trade account. Now credit 20, cash was received 16, cash control debit, debit 16, debit 2, this is the expense now, expense stocks damage, net expense was 4. This is the double entries. We must concentrate based on that. Look here, there is a closing inventories there, no? What is the meaning of physical stocks? Look here, however, closing inventory has been ascertained. Closing inventory means remaining closing stock. Okay, ascertained based on physical available as at 31st March 2023. Okay, the physical stock means actually remained the tangible stocks in the business. Okay, therefore we can identify after this destroying there's a physical stocks means already correctly calculated. Why? After the stocks was destroyed, we can identify the remaining closing stock clearly. Why? This physical closing stocks are not included this destroyed stocks. Why? This physical stocks was actually finally remaining physical stocks. Finally remaining physical stocks means this destroyed stocks are not included in the closing stock. Why? The physical is actually tangible remaining closing stocks. Why? The damage was already done, destroyed. Okay, after the destroying, the closing inventory was correctly identified, physical stock, therefore no impact to physical stocks of closing inventory. Therefore we can already adjust this adjustment. Cash control is not related to income statement. Okay, next one, these two are impacted stocks damage net expense. Okay, stock damage expense now and trade account credit. What is that? Firstly we identify trade account credit. Look here, trade account credit, what is the location of this? You know, trade account credit means at the cost of sale, you must deduct stock damage 20. This is the location. There's a purchase in there, we must deduct stock damage. Okay, this is the location. This is the cost of sale is a location of trade account. Therefore we can identify location is this area cost of sale. We deduct from cost of sale. Okay, we deduct from cost of sale. You can see there's a before the gross profit calculation, the stock damage 20 was impacted. The gross profit was impacted. Why? Before, you know, gross profit was calculated sales minus cost of sales. Okay, at the calculation of cost of sale, the newly adjustment was impacted. What is that? Trade account credit. This is trade account credit. This trade account credit is was impacted to gross profit. Why? Gross profit was calculated using cost of sales. Cost of sale was impacted, gross profit must be impacted. At that time gross profit was credit dial. Gross profit was, remember that, credit person. Profits are credit persons. Okay, net profits are credit person. This short was credit. Look here, this short was credit. Why? Trade account credit 20. Therefore the trade account credit, gross profit was credit dial, credit to credit short, we can add this 20 to this 20 was credit dial. This was impacted to gross profit. Remember that gross profit was impacted, net profit was automatically impacted. We must, this credit short we must add it 20. Why? Gross profit was calculated, this the top of this was impacted, this head side was gross profit, this side was already impacted, the leg side, the underside automatically impacted. This is impacted to head, this is impacted to gross profit. This short was impacted to downward side. Why? This is top of this head now, this is impacted to all gross profits and net profits. Therefore this plus short was impacted to net profit. Why? This plus short was impacted to gross profit. Now gross profit was increased, net profit should be increased. Okay, the impact was top of this. These two are both are impacted. The impact was before the gross profit, both gross profit and net profit was impacted. Therefore we must add to both net profit and gross profit. Next one, this is expense. No, stock damage expense. What is the location of stock damage expense? Other expense. What is the location? Other expense. No, what is the location of other expense? 4. Other expense was this area. Okay, other expense was this area. Therefore we impacted only net profit. Why? The gross profit was before the expense. No, therefore this expense was impacted to net profit. What is the short? 4. Credit or debit? 4 was debit. Sorry, expense debit. No, expense debit. No, debit short is 4. net profit is credit dial. Debit should be deduct. Debit should be deduct. Debit should be deduct. Debit should be deduct 4. Why? The expense was stock damage expense 4 is impacted to expense side. Expenses was impacted to net profit, not to gross profit. Okay, therefore this is the expense was debit, this is the net profit was credit dial. No, at the expense was debit short, therefore this is the opposite side, therefore I deduct it. Therefore we can calculate correct one. 170 is correct gross profit, correct net profit was 96 based on that. Okay, 170 and 96. Now 170 is gross profit and 96 was net profit. Answer is 5 for question number 8. Question number 8. Okay, in next video we must concentrate to this is prime cost. Okay, this is the production cost related transactions. Okay, in next video we must meet question number 9.